welcome. My name is RJ Kelly. I'm founder and chief visionary officer for Wealth Legacy Group. We're in San Diego, but we've got clients in 21 states. And so we're very likely can easily work with you wherever you are. But more importantly, I'm here to just share ideas. I'm here we work typically with high net worth families and individuals, oftentimes business owners, but not necessarily. But the point of it is, I just want to share some things with you in terms of some advanced planning ideas. It may be applicable to your situation, or at least maybe one or two of the ideas might be. We're going to have today actually a variety of different things to share, and you can always reach out to us at info@wealthlegacygroup.com, info@wealthlegacygroup.com, in case you are either A, have a question about what we're going to share, or B, you'd like to see a presentation on something else, because we are constantly looking for ideas to bring that will help whomever watches it, whether they hire us or not. So let's start in. We've got a very dear friend of mine is a trustee for a wonderful family back in Georgia. And so you will see Georgia Peach and Bulldog. That is not their real names, fortunately, but at least especially for Bulldog. But mother and son, she especially is absolutely charming. And so my friend was asking me, RJ, we've got some planning challenges here. If my client dies, it's going to leave a substantial hole, and I don't know where they're going to get the money to pay the estate tax. So we got brought in to brainstorm. And so I'm just going to share with you some ideas that for what their current situation is first, and then secondly, what we recommended to them to help eliminate estate taxes. And just as an aside, I'm oftentimes brought in simply because I know two things. I know more than two, but two things especially. One, capital gains taxes are optional. You heard me right. Capital gains taxes are optional. You don't have to pay them, and you won't go to jail if you do something else instead. Now, I'll unpack that a little bit more as we go along. But on top of that, federal death taxes, called estate taxes, are also optional. You don't have to pay them, and you won't go to jail if you, again, do something else, which we'll talk about as we go along. So that was what brought me in on this case. So at the time, 76 years old. So this is just fresh off the presses. Son, 58. Her net worth altogether, we figure, is about $37 million. A lot of real estate and some stocks, about $5 million in stocks that she inherited when her father passed away. And then about $30 million in real estate, as you can see. She had already used up $1 million of her what's called the lifetime exemption. And so therefore, you're going to see that what this year in 2024, the federal exemption is $13,610,000. But since she'd already used up $1 million, that leaves only a $12.6 million, although that sounds like a big number, to reduce her taxes. So God forbid if Georgia died today, what would be the impact? Well, a lot of sad people, because she's a really nice person. But in addition to that, there would be a massive tax bill. And that money is due within 9 months after date of death. Now, there's a special deferral, but in this case, she wouldn't qualify for it because she doesn't have a business. She just has a lot of real estate. So $37 million minus a $12 million exemption, $24 million and change that would be subject to estate tax. And the federal estate tax is 40%. And you heard me right, 40%. So almost $10 million in federal death taxes. And they don't take, they won't take real estate. They won't take card collections. No, it has to be cash or a cashier's check. That's it. That's all the U.S. government will take. They don't even send a thank you note. They're not going to name a missile system after you, a post office, nothing. No, just send us the money. So not a good situation. Where's he going to get $10 million? So again, God forbid something happened to Georgia today. Where's Bulldog going to get the $10 million in cash to pay the estate tax? Well, there is liquidity because there's stocks. And right now the stock market's doing great. But a couple of years ago, it wasn't doing so great. So what happens if the stock market portfolio is down by 10, 20% at the time? Yes, it's liquid, but it doesn't mean that the value, it doesn't bounce all around. So where are we going to get the money to pay the tax? And frankly, it only gets worse. Now, please God, based on her life expectancy, she is likely to get to age 99.6. So call that 99.7. So just call that age 100, can we? So if we assume growth of 24 years, and we're just assuming that the assets are only growing at 3% a year, they're growing much faster than that. But let's just be ultra conservative. Let's say 3%. You can see that estate now will have grown from 37 million to over 75 million. And the estate tax exemption will have changed. The Trump Tax Cuts and Jobs Act sunsets after December 31st, 2025. So the estate tax exemption's likely going to drop from about almost 14 million down to probably about 7.5, maybe a little bit less. One of the CPAs that we follow quite a bit estimates that it could be as low as $6 million per person. So whether it's 6 million per person, 7.5 million per person, or something in between, it's going to be a whole lot less, bottom line. So 75 million, assuming an estate tax exemption of about 10 million, obviously cost of living here assumption going in, $25 million of a federal estate tax due. Again, within 9 months after date of death. Can't give him any real estate, can't give him anything other than cash. Where is that going to come from? And sure, Bubba could sell things, but guess what? You know, when you have to sell something, do you get the best price? No, not at all. It's like going to a garage sale. Do you want to pay the most for an asset, or do you want to pay the least amount you can? And the answer is obviously it's the latter. And when someone passes away, the word gets out very quickly. Oh, somebody died. Georgia died. That's why they're trying to sell this property. And guess what? They'll come in with a lowball offer, maybe 25 cents on the dollar, maybe 30 cents on the dollar. I've seen some estates that by the time they got through selling assets at discounted values, there was nothing left to share as an inheritance. That's it. It all went in taxes.